Welcome to The Explainer. Today, we're jumping into a real puzzle in the financial world: why gold and silver have suddenly hit a wall in 2026. So let's get right into it. What is the big paradox facing anyone invested in precious metals right now? I mean, after a truly historic run-up, the market has just stalled out. What's really going on here? Before we can figure out why things have stopped, you've got to appreciate just how incredible the climb was. Gold rocketed up to $5,000 an ounce. That's a huge 57% jump in less than a year. Just wow. And look, if you thought gold was impressive, silver's performance was, well, it was on another level entirely, up a jaw-dropping 152% in the same amount of time. We're not talking about small moves here. These are absolutely historic gains. So that's the big question, right? With all that crazy momentum, why did everything just stop? Well, the answer isn't what you might think. The real reason is kind of hiding in plain sight. Yeah, everyone loves to point to war and inflation, and sure, they cause little price spikes here and there. But they aren't the main event. Not even close. The one thing that really drives the train for gold and silver over the long haul is what the market thinks is going to happen with interest rates. And that, right there, brings us to the absolute core of the problem. The Federal Reserve is trapped. They are well and truly stuck between a rock and a hard place, and the whole market is just watching, holding its breath. And here's the dilemma in a nutshell. On one side, you've got inflation that's still stubbornly above their 2% target, and rising oil prices aren't helping. That just screams raise rates. But then you look at the other side. GDP growth is sputtering along at 0.7%, unemployment is starting to tick up, and you're seeing real stress in private credit markets. That's a huge red flag demanding rate cuts. See, they're completely boxed in. And you know what? The market sees this trap crystal clear. This isn't some backroom secret. This deep uncertainty about which way the Fed is going to be forced to jump, it has completely changed the mood. It's frozen everything. I mean, just look at how fast things have changed. A few weeks ago, everybody was betting on 2, maybe even 3 rate cuts happening in 2026. And now, the market's pricing in, well, basically nothing. 0. Maybe 1 if we're lucky. All those hopes for cuts have been punted a whole year down the road, into 2027. And that's the key takeaway right there. The paralysis you're seeing in gold and silver is just a mirror of the market's paralysis over the Fed. Until we get some kind of clarity on where interest rates are headed, these metals are probably going to stay right where they are, in this holding pattern. Okay, so things are stuck now, but this deadlock isn't going to last forever, right? Our analysis points to 3 specific catalysts, 3 big signs to watch for that could finally break this stalemate and get the bull market going again. So these are the 3 things to keep your eyes on. Any single one of them could be the trigger. But if you see 2 or 3 happening at once, whoa, things could get really interesting really fast. Let's break them down. First up, you've got to watch the private credit market like a hawk. We're already seeing huge names like BlackRock and Morgan Stanley having to limit investor withdrawals. Bank stocks are getting hammered. And history tells a really clear story here. When the credit system starts to seize up, think 2001, think 2008, the Fed has no choice. They have to step in and slash rates to prevent a total meltdown. And we all know that those kinds of rate cuts are pure rocket fuel for gold and silver. Sign number 2 is oil. Right now, at around $100 a barrel, it's just pouring fuel on the inflation fire, and that's tying the Fed's hands. But if we were to see oil prices pull back, maybe relax toward $80 a barrel, that would be a huge sigh of relief. It would give the Fed the breathing room, the cover it desperately needs to finally start cutting rates. All right, and the last sign is a bit of a wild card. And this one is a really big deal for silver specifically. We have to remember that silver isn't just a monetary metal, it's a critical industrial component, especially for this whole green energy revolution. And this is where it gets really interesting because you get this powerful feedback loop. Think about it. If oil prices stay high and the supply is shaky, what does a massive energy importer like China do? They can't just sit around. They're forced to accelerate their push into solar and EVs for their own national security. This would unleash a massive wave of industrial demand into an already tight silver market, and that could send prices soaring no matter what the Fed is doing. Okay, so we've got these catalysts on the horizon. Let's put it all together. What does the timeline actually look like for the rest of the year? When should we be watching for things to change? Well, the forecast suggests we should probably brace for more of this pressure through the first part of the year. But the key window to watch, the time when things could really start to turn around, is between May and July. That's when the Fed might finally have enough bad economic news that it's forced to act. As for the mining stocks, they'll likely lag a bit, maybe finding their footing in the final quarter of the year. And hey, if you're a silver bug, these are the numbers you want to burn into your brain. $71 has been that critical floor, the big support level, but the real prize is $96. If silver can punch through that resistance, the path is clear to go back and retest that big $121 high we saw back in January. You know, when you boil it all down, the message from this analysis is pretty simple. Patience. That's going to be the key over the next couple of months. The big fundamental forces are lining up for a major move, but the market just needs a minute. It needs to wait for one of these catalysts to finally break the logjam. And that really leaves us with the ultimate question, doesn't it? The market feels stalled. It's quiet, maybe even a little boring, but underneath that calm surface, these powerful economic pressures are building. So this probably isn't the end of the rally. It's more likely a pause, the quiet before a potentially significant storm.